Hi everyone. So today we will do an analysis on Terracom. The ticker is TER.AX, and this talk is in the coal mining industry. So this is a quick disclaimer just to explain that I'm not here to give any financial advice, that I'm actually not an expert in the industry, but I'm just here to give my opinion on fundamental technicals, market sentiment, and the whole picture. And at the end, I just said I'm not paid by any of those companies. So let's get started by explaining what that company is all about. So first of all, it is an Australian company. So it's based like in the ASX stock market. And the main purpose of the company is to develop and operate coal mines in Queensland and South Africa. So as you can see in here, South Africa and Australia, and then like the major customers are in India, South Korea, which is here, and then like Japan. So that's what I wanted to say. And so the major like thing mines they have is thermal coal, and they have a little bit of coking coal. So just to be a bit more precise, I'm not really an expert in that area, but usually thermal coal is slightly better quality than coking coal. And the last thing I wanted to add is the management owns around 2.7% of the company. So I wouldn't say it's that much, but it's still pretty like relevant. It means that they have shares, so it's a good thing. So looking at the very basic fundamentals, what I was interested in that stock was simply the PE ratios. By default 6, it's not too bad. There were no dividend yield, but like this we can look a bit further to guess what happened. And then the price was pretty like low compared to the other coal companies. So I wanted to know why is that. So market cap, you have to bear in mind that is quite small compared to other coal mining companies, and so let's get deeper. So here is 2 screenshots from a report that I took that came out a few days ago, and I wanted to show you guys what is the cost of production and what is the expected sales average that they have had. So the production cost at the moment is 118. So as you can see here, 118 per ton, and then like it's expected to go a little lower to 105 to 110 in the next few quarters, if they can sell 1.8 million ton of coal. And the second thing I wanted to share is basically I've seen in their report that the average sales is 159 Australian dollar. So I expect that all of these prices are Australian dollar, by the way. And then their sales in US dollar, we're saying that their average was 140 US dollar. So that's about 180, 190 from memory. So I'm not too sure between the two, but let's take 159 so that we save. So we still have a slight margin. It's not too bad. I wouldn't say it's amazing, but it's still maybe around 30%. So let's look at Yahoo Finance, so the statistics, and I'm just gonna come back to like the ratio. So price to sell, price to book, like price to book under 1, I would say this is quite good. I always like when they are under 1, and like even enterprise value to EBITDA is quite low. I mean, like anything under 7 is really low. And of course the trailing PE at 6, like we've seen before. So in the financial highlight, I would say that they're not really that amazing. Majorly, I mean, you can see that at least like they have like net income, so like that's always a good thing, which is 10% of their revenue, which is all right. They don't have that much cash per se, but at least they have no debt, and I would say this is a major advantage. When there's no debt, it's always much better. I mean, the debt is like just 4 million, but because they have 8 million cash, it's pretty much saying they don't have any debt. And the book value, which I find good, is 21. So the current price is 20, so less than one book, as we said earlier. And the last thing I wanted to show is at least they've given dividend in the past, but they haven't given any recently. And like that was 92% of their payout ratio, so it sounds like something happened there, but we will figure out next. So what I wanted to show in this one, so this is like the balance sheet. So in there, all you can see is like the total assets. So they actually reduced a lot, and I was like wondering exactly why. But it's pretty simple. All they've done is pay back all the debt. So there were like quite a lot of debt over the past few years, and they went from 310, I think, million to like basically near zero. And that by itself was a really good thing, because if you look at the equity, it went basically from negative to at the end be like 170 million, which is always a good thing. One thing to point out is that at least insiders have been buying recently. So over the past few, just like 2 months out there, apologize for that. And as you can see, they've been buying, so that is on market, not given any shares. So that is actually a good thing in my opinion. I always like when they're buying. I mean, they usually buy for only one reason and they sell for multiple reasons. So when they do buy, it's usually a good sign, but you cannot just buy because they just bought. You never know. It's always a little plus. One more thing they announced a few days ago in their report is that they will be given like 1 cent of dividend, and the share price is 20 cents. So that will give like around 5% dividend. That will be in like at the end of this month, the 21st of November. So I find that always additional thing that is nice if you buy before, to have a 5% dividend right after, and then pay it next month. So let's have a look at the technical analysis. So it's a little bit noisy out there, but I will try to keep it simple. So this is the ticker, like Terracom basically, their chart. So this is a bit more zoomed in, but it's basically like there is a massive spike from 2022, and it's been pretty much going down since, from 2023 onward to now. And I found that the price are a bit more appealing at this current price, and of course then at the top. And I thought, yes, not the lowest of the lowest, but there's some resistance a bit in here, and it's indicate that maybe it might be a start of a reversal. It's a bit early to tell, but it's a good sign. That's all I can say. As you can see, over the long term, the stock has been beaten down a lot since 2013, and it's pretty much not been doing much, from like just going up and down since then. But what I found really interesting is, if you seen in the past the Livermore like cylinder, that was like one of his strategy that was like doing like basically there is like 1, 2, 3, 4, 5 like this, and then 6, 7, and then that's when it start to go harder. So what we see here is, in my opinion, quite similar. So let me know if you think not, but I think it's quite similar. So like you see 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7, and then we could expect that if it does happen. So this is the chart of a coal future. So I just want to talk about the coal price because it's very important actually. The coal price has a direct correlation with the stock price in this matter, because they are mining and they're selling coal, and the price of coal is directly impacted. So if the price of coal rise, by default the company will do well. If the price goes down, it won't. Logical, right? So in this case, I just want to show why they've had like a spike as well. So the stock price have had a spike the same time as the price of the coal, and that's during that period. So in there, that's when they actually pay back their debt. So that was actually a very good move from them to pay back their debt, have no debt, and then from there have a company that is debt free, and they can hopefully grow or at least start making more money from there. So at the moment, like it's cooling down a little bit, but if you can see, there is a bit of resistance from the previous high in here. So in here and in here, in here, and then after, as you can see, they've touched in there as well, so which is always a good sign. Doesn't expect anything. It could still reverse from here, which is at the moment, like, we don't know yet. So in here we have no idea at the moment. It's too early to tell, but at least it's not going full down, and most people at the moment are expecting coal down to be wave 0 because they think that all the solar panel and like all the windmills, they will actually replace everything. I'm not too sure about that. I cannot say they will or they won't. I have no idea, but at the moment I can see that we still need coal, and that's all that matters to me. So yeah, at the moment it looks like to be stable, and it might reverse. Let's see a little further. So this is the same chart as before, but just on the weekly, and it's a little bit like more zoomed in to see what's happening recently. So what I like, at least, and that doesn't mean anything, but at least I like that there's a stable price at the moment around there. It's been happening for the past 1.5 years. I find that quite good. So at least it's like, and it looks like it might actually start to slowly go up like that, but I've seen before that it could drop too, so we never know. But the good thing is we are in inflationary environment, so it might help to push it up a little bit. Let's see what happens, but I would say this could be a risk, obviously, if the price were to drop. So to conclude, there are quite a few advantages on this one that I quite like. First of all, the insider buying. Secondly, like I would say, in terms of technical analysis, it's not a bad time to buy. Where I would say that at least we are on low price. It could still drop, but the price look low enough to give it a little bit of safety, considering the price to book as well is less than 1. Anytime it's less than 1, it's always not a bad thing. I mean, a good thing overall. The last report were pretty good as well. Overall, it shows that they were like handling the thing pretty well, I would say, fairly well. And then that they were announcing that they would be like doing quite well, maybe in the near future as well, selling 1.8 million ton coal, and their recent dividend as well, would say announced that at least they have extra cash and they're happy to give it to the shareholders. The risk, there are always risk in companies, so no matter what. So in this case, I would say that can they actually continue to perform and like manage the company well? It's not because before they've done, or like in the past year or two, they've done a bit better than they could continue to like happen in the future. We have no idea. And the last thing is, of course, it's all impacting on coal price. So would the coal price rise or not? That would be the major risk in there. I believe that there is a good reason that it will go higher in the future, because like that's how you have to be a little optimistic. But anything can happen. There is a lot of things happening around the world, so short term we really don't know. That's it. And if you have any comment, please let me know. I'd love to hear as well your feedback, or if you have anything to add that could help, that would be very welcome. Thank you so much, and hopefully see you in the next video.